Thank you for tuning in and welcome back, team. In today's episode of Real Estate Facts, we'll talk about 9 questions to ask your mortgage lender. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. Thank you. Okay, team, so let's talk about this. There's 3 things that you want to really consider whenever you're out there looking for a mortgage officer to begin with, or a lending company to assist you with your home loan financing needs. And then there's 9 questions that you're going to want to ask that mortgage professional to see what the answers to those questions are and determining if they're the best loan officer to help you. So let's go ahead and start talking about the 3 things that you want to consider when you're actually looking for a home loan officer. Because when it comes to financing your home, there are no dumb questions, and a good loan officer is going to be able to answer all of your questions and provide you with all of your options. So the first thing is to actually be a smart shopper. I mean, there's a lot of different type of loan programs out there. There's FHA, VA, USDA, conventional, there's jumbo loans, there's what's called DPA for down payment assistance, or HIP for home as possible loans. There's so many, so I know this can be a little bit of a tough nut to crack, so to speak, and there are so many products and programs. You need the right loan officer to chat with you and explore your options together. So part of being a smart shopper is to Google everything. I mean, don't believe anything that just pops up on Google as an advert that says, hey, you can get a loan pre-approval in as little as 8 minutes, or hey, get apply with us and get a rate that's like 2 percentage points or 1 percentage point less than the going rate. Normally that's like a bait and switch, and there's some things going on. So about being a smart shopper is actually interviewing some local loan officers and getting an idea of who they are, how they operate, based upon their client testimonials, the reviews, and the ratings of other families just like you that have worked with them to procure home financing for their new home. The second thing that you want to consider is finding a reputable lender, which is what we just segued into off of point 1 with Googling that loan officer. No matter whether you're looking for a trusted real estate advisor or a loan officer, you always want to Google everything. I mean, you Google everything now, right? So why wouldn't you Google the people that are going to help you with the biggest investment in your life? Verify those ratings, verify those reviews, make sure that you have an active loan officer that is knowledgeable and has experience closing on the type of loan that you're looking for, okay? So then the third thing is, what makes a lender reputable? Well, customer service is always the biggest one. Quality lenders are approachable and are always available to answer your question. They give you their personal cell phone number, and they are always available to you. If for some reason you call them and they miss your call, you left them a voicemail, they call you back that same day. That is a reputable and solid lender. They got to be focused on you, the customer. They got to be focused on you and in providing you with all the information that you need to make a well-informed decision before you marry that 15 or 30-year fixed rate mortgage, right? So no matter what you're looking for, you really need to make sure that you're working with somebody that has your back. And talk is cheap. Some people are just going to tell you whatever you want to hear. If you tell them the rate's important to you, then they're going to focus on what they can do to get down that rate, but may not be sharing with you the trade-off of getting that rate down means that you're going to be buying points, or there's going to be other things involved, other fees involved to get the rate low. Why not ask them, okay, this is what I'm looking to do, complete the online loan pre-application, submit your documentation to them, and ask them, okay, based upon your experience, what loan options do I have available to me, and which, in your opinion, is good for me and why? Okay, because having a local team, a local loan officer is really going to be ideal here, because you can actually sit down face to face with them, and they're always going to be there in the same time zone, and they're always going to be there to assist you. A local loan officer is always going to be highly beneficial to you whenever you're buying your home. So the 9 questions that you want to consider once you've found some loan officers you want to talk to. The 9 questions that you want to consider are: number 1, based on your goals, which programs would you recommend, right? Based on your goals, right? Based on your goals. Do you need down payment assistance? Do you need help with your buyer closing costs? Are you interested in getting the best rate possible? There's so many different options out there. Are you looking to try to get a little bit more home than you might be able, or thinking that you're able to afford, and you might need some more creative financing techniques to assist you? There's a lot of different things out there. So based on your goals, right? So let me rephrase this question as though you were asking it to the local loan officer. Based on our goals, which program would you recommend and why? Okay, so the second question is that you want to ask is, what is the interest rate? Now, this one is always like the most obvious thing that comes up when people think mortgage loan officers, right? But here's the deal. When you're looking at mortgage interest rates, those things change every single day in a lot of cases, and several times a day at that. So they can quote you a rate as of that day, but it actually will change by the time you close on your new home, depending on how quickly you're out going home shopping with your trusted real estate advisor and entering into the closing process to close on your new home from the time that they rate quoted you. If it's like within 1 to 3 months, unless there's something really drastic going on in the market, that there's a big shift, then it's going to be at least comparable in terms of maybe maybe being a 5% or a 5 1/8 as an example, or a 5.25, something like that. Going to be comparable within that time period, but you need to know what that rate is because it impacts how much home you can purchase, and you need to know if you're getting the other flip side of that, the terms. It's just like in real estate contracts. The devil's in the details and the devil's in the terms. With loans in specific, if you need down payment assistance, it's going to increase your rate in many cases. That's how those programs work. If you want to buy down the rate, that's going to cost you points. So you need to be prepared for that if that's something that you want to look for as well. The third question that you want to consider is, do you offer rate locks? Different companies might have rate locks that can be provided to you for a fee, of course, from 3 months to 6 months before you purchase. So sometimes this is a good idea if you know for a fact you're not going to be buying a home for at least 3 months, but you want to get today's rates because you're afraid that the rates are going to go even higher. First of all, before you do that, and you're working with a local reputable loan officer that you could easily find one by working with your trusted real estate advisor and asking for an introduction, by the way, then you want to ask them, hey, based upon what rates are doing in the market right now, and what do you think rates are going to do in the future? Do you believe it's wise that we go ahead and do a rate lock now? Ask those questions of the local loan officer so that they can assist you in knowing whether you need to pay for that rate lock now to protect yourself into the future, or if it's one of the situations that maybe it's going to be okay to just go ahead and write it out. It's going to be your call at the end of the day, but with all the information being provided to you, it'll go a long ways to helping you make the best decision possible. Okay, so the fourth thing is, what are points and how much do they cost, right? So the points, the reason that people get caught up in the points, and you do see this as teaser rates across the internet and a lot of adverts, if you read the little asterisk and the really itty bitty tiny print, you might want to go ahead and hit control zoom and get in as big as you can on that so you can actually read what they're doing there. A lot of those people are saying that you're agreeing to buy 1 to 2 points to get the quoted rate, and it might be something like a 3 to 1 adjustable rate mortgage. So you really got to be paying attention to that marketing slogan and how they're coming up with that rate. But essentially with points, what happens is some lenders will charge points if you want to buy down the rate. That's essentially exactly what you're doing. So to give you an idea of what a point is, for every 1 point, it's going to cost you 1% of the home's price. So let me break this down for you in lender math, in the lender world. When you're talking about a point, you're talking about an eighth of 1%, right? An eighth. So 0.125. So the buy down, let's say that you're looking at a $400,000 house. Let's say that you wanted to buy 2 points. If you're going to buy 2 points, or essentially like a quarter of a rate, or a quarter of a whole 1%, right? $400,000. We're going to take that $400,000 and we're going to multiply it out by 1% for 1 point. So that's 4,000. And then you're going to take and add another 4,000 to it because you wanted to buy 2 points. That's $8,000 that you're going to be paying up front to buy down your rate. That's an example of how those points are going to work. And it's going to really depend on how long you intend on staying in your house. I mean, if you plan on being there 20, 30 years, okay, it might make sense. But a lot of people actually move every 5 to 10 years, and it may not make as much sense. So it really comes down to being very clear on why you're buying your new home, what your purpose for your new home is, and how long you realistically plan on living there. If it's one of those things, hey, I can see myself living there forever, okay, well, also look and consider your career and everything, because if you can live there forever, perfect. But at the same time, if you're anticipating job promotions or maybe other employment opportunities elsewhere that might take you away from your house in 7 to 10 years, then you need to factor that into your decision whether you wish to buy points or not. The fifth question is, what are all of the lending costs? You know, a lot of times buyers get a little bit surprised by extra fees that tend to pop up out of nowhere during the loan process. And if you have a reputable loan officer, reputable local loan officer, again, they're going to discuss all the fees with you. And working with a trusted real estate advisor, they're going to assist you in understanding what it's going to cost on a percentage basis to get into your new home. Because not only do you have a down payment, you have buyer closing costs. So whenever you talk about buyer closing costs, then we got to take a look at what are those costs and ask the local loan officer to break it down for you. For reference, for just your planning purposes, when you're considering buyer closing costs, plan on 2% to 4% of the home's price. So going back to our $400,000 home example, you need to be prepared. If it's 2%, you need to be prepared for an additional $8,000 of buyer closing costs. And if it's 4%, then you need to be prepared for $16,000 in buyer closing costs on top of your down payment. Okay, it's important to know that there's two sides here. There's a down payment and buyer closing cost. Okay, so you want to ask them what it is. What's the origination fee? And it is a one-time fee that a lot of lenders charge to process the application and get going whenever you start going into the closing process. So what is the origination fee? Other costs could be pulling your credit report. Obviously, you're going to have a home appraisal. You, the buyer, pay for the home appraisal. You're going to have recording fees with the county. You, the buyer, are going to pay for that. And ask for a loan estimate so that you aren't blindsided, so you can break down the other fees in there and go ahead and plan it out. If you plan it out on the percentage basis with your trusted real estate advisor, then you're going to have more than likely more than enough money to pay for all these fees if you're planning ahead of time. That's why I always recommend that you get in touch with a trusted real estate advisor anywhere from 3 months to 12 months before you intend to purchase, to start understanding the home buying process and coming up with a game plan to be successful. The sixth question that you want to ask is, will my loan have prepayment penalties? You want to make sure that if you pay off your mortgage early, that you're not going to be penalized for doing so. So ask that question, okay? The seventh question is, where does the underwriting process take place on my loan? Because your loan is going to have to go through underwriting for final approval. A lot of times having an in-house underwriter is faster than having one that's out of state or in another area. Depending on the company, they may have them out of area, and it might work better depending on what time zone they're in. So that, for example, if the underwriter's on the East Coast and you're buying a house on the West Coast, then by the time everybody gets up and gets awake and gets to work on the West Coast, that underwriter on the East Coast might already have the approval ready for you to go for that day, ready to go forward before anything else starts on the West Coast. That's an example of how that could work beneficially. And a lot of times, though, is if the underwriter's in-house, it makes the process a lot smoother and easier to getting your underwriting approval done, for simple virtue that they're right there, right? So, the eighth question, what's the normal timeline it takes you to close on a loan? This is what you want to know, because you're going to have different markets. You have a seller's market, a buyer's market, a stable market, right? Well, if you're in a seller's market and you're trying to make your offer as competitive as possible, having a longer than normal escrow period because of the loan officer is really going to be lousy, because it's going to cut your chances of being able to negotiate a term with the seller that might be more advantageous to them if they're looking to sell their home, close as quickly as possible, and move on to their next home that they wish to purchase. So offering a quicker closing time frame can be very beneficial as well. For reference, if you're on the West Coast, generally, between 30 and 40 days, you're going to be able to close an escrow. Depending on where you are in the country, if you have attorneys and stuff like that, you're in an attorney state, it might take somewhere between 40 and 50 days to close on a loan. It just depends on what state that you're in. So that's a question you want to ask of the local loan officer you select in the area that you're in, is how long will this process take, start to finish? So it's something to know about, okay? And it's something that you want to ask about. And you also want to ask them, going back to verifying that they're a great loan officer, you want to ask them, what is your closing rate? What is your closing percentage? In other words, out of the families that you work with on a yearly basis, if you worked with 100 families this year to help them get a loan, how many of them actually closed? Was it 80%, 85%, 90, 99%, 100%? The reason you want to know this, because that shows how much skill that loan officer actually has. I mean, obviously there's things that a loan officer can't control, such as if a buyer went out and all of a sudden bought a truck in the middle of a closing process. Well, I hope that buyer likes that truck, because they just lost their home in many cases, just to be honest with you there. But if it's something that's in their control and they're not closing on time, or if it's in their control and they're not making good on that loan, then it shows a deficiency somewhere in their verification process when they issue the pre-approval, which would have been verifying your income, your assets, your credit, and your employment. Okay, so you want to be aware of that, and you want to know what that closing time frame is, as well as their closing percentage number. The higher the better on that one, right? The lower on the timeline is better, and the higher in the closing percentage is better. Now, the ninth thing is that you just want to ask is, after you close on my home loan, do you sell it? And do you sell it? A lot of mortgage lenders will sell it. For example, here in Las Vegas, Nevada, Bill Marin over at New American Funding, his company, New American Funding, actually services the vast majority of their home loans. The only home loans they can't service are the down payment assistance or home as possible loans, because U.S. Bank is the one that services all of those across the nation, essentially. So, but all the other type of loans, VA, FHA, traditional, USDA, conventional, jumbo loans, what have you, his company, New American Funding, actually services them. And it's something that I find very interesting, because you want to know where your mortgage is at all times, and you want to make sure it's not being sold. I mean, that's part of the issue that led up into the 2008-2009 collapse. Just something to think about. Now, we've gone over 9 questions that you want to ask your mortgage lender, and we shared some tips on how to find a great and reputable local loan officer, right? So now it's your turn. Tell me what you took away from this video that was the most impactful to you. Was it the first 3 points about actually doing your research and finding a local loan officer and a reputable lender to work with? Or was it maybe some of the questions to ask your local loan officer, like, do you offer rate locks, and would you recommend them? What are the all-in costs? Getting a loan estimate up front, if at all possible. Or was it possibly knowing more about what is the typical timeline it takes that loan officer to close, and what is their closing percentage? Tell us what you took out of this video in the comment section below, along with any of your tips and questions that you'd like to share with our community. Now, I'm going to go ahead and pop up my contact information. If you need help finding a top agent where you live, or if you simply want to drop me a line and say hello, feel free to reach out to me. I'd love to hear from you. If you haven't already done so, please go ahead and subscribe to this channel now, like this video, and share this video around with someone you know is going to be able to help. Thank you so much for watching today, team, and between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Enjoy an amazing day.